And between those two, while I enjoyed the assets and working with some of the institutional groups that come with that, I like working with the smaller groups a lot better. As a company, I think we probably echo that, and recognizing with where we are in our growth, that's what the profile of most of our existing owners and clients. But you're able to do more for those people. I think you provide a lot more value. There's not an Ivy League MBA, going through an Excel spreadsheet, emailing you every day with a different question about a day over day trend.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else. With your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, is John Cohen. How are we doing?
We are good. We are arguing with some sellers right now.
Always.
We had a little 15-minute break in between some recordings today, so I just was screaming at some people because properties are not for sale, and they're trying to force them for sale. So, we're getting... I'm a motivated buyer, and I'm like, well, that's great. I'm an unmotivated seller. So it doesn't matter. I don't care how motivated, show me how motivated you are, right? Keep adding zeros or dollars to the offer. But it was a fun little break there. So, but it is what it is.
Yeah. It's a nice little segue from when we were talking about like being willing to walk away from a deal in our last episode to what you're just talking about. It's just like,
Yes.
how can you turn around and go to your capital or your investors and be like, yeah, we pushed them. We just kept offering more until we got a deal. I don't see how that's going to make sense, but
this is going on 2 weeks. It's market blending, right? They want to buy the deal. And I'm like, guys, it's not for sale right now. I said, I've owned it for 8 months. I said, you got to give me a little bit of a, well, what's the number? What's the number? What's the number? What's the number? I was like, there is no number. I said, it's a loan assumption. It's not ready to be sold, but they will refuse, and they keep pushing, I'm motivated. I said, listen, if you're really motivated, then go buy one of the 10 deals listed on the market right now. Yeah. That is for sale. That's priced crazy. I said, if you want me to sell this, do you think you're going to get a discount by coming to me directly? No, there's no discount. I know what the broker will sell it for on a cap rate / 2021 expectation, right? I just said, you're not that motivated. We don't buy marketed deals. Okay, so if you pay market price for a non-marketed deal, what are you doing? You're buying a marketed deal, right? I mean, it doesn't matter if it's on market or off. So, listen, I'm not the smartest guy in the world, but that's the dumbest thing I've ever heard in my life.
Yeah, no, I think it's interesting. We talked about it a lot, trying to go off market, direct to owner stuff. And it's really tough to do when you're talking to sophisticated groups or, investment groups, because nobody's dumb, right? Everybody knows kind of where the market's at or roughly where it is. And, you're in the ballpark of what it's worth. You're not going to buy something for a 20% discount. So, it's nice, right? It's nice to say you got an off market deal, but we've even seen off market deals that were like, I think that probably sold more from what the market would have paid for it.
Well, that's the whole thing. You're also seeing trends now in today's world. Brokers are selling deals quote unquote off market. They're just not putting listing presentations. They're even lazier than they normally are. Now they're not even putting listing presentations together. They're just selling stuff, because there's so many buyers out there. But I just got the text message while we're on this, while we're doing this, he wants to get on a call. And I guess it's his secretary because, I got 2 missed calls and I didn't answer them. He wants to get on a call and hash it out directly. Can he please call you? I was like, well, there's nothing to hash out.
That's great. I love that. Curious to see what happens there. You got to keep me posted. But let's jump into today's episode. We got a great guest on today. Excited to pick his brain as a property manager, as a brand new property manager myself. Always looking to talk, and we talked prior to this, but hopefully I can learn even more from him today. So with that being said, Steven, thank you so much for joining us.
Yeah, I appreciate it, guys. Thank you for having me. I guess a quick update for your audience on who I am. Steven Rea. I've been in the business for about 15 years, since 2005. managed a little bit of everything. Started working with a private investor, managed her portfolio. I had retail, industrial, commercial office. I had a 16-unit apartment community that was rented by the week, where everyone paid cash. Duplexes, fourplexes, and really kind of found a passion for residential management and property management at that time. And didn't stay there for about 3 years. So I spent the bulk of my career with Austin-based property management company called Roscoe Properties, where I was really lucky to serve in several different leadership roles there. I spent a lot of time with training and operations, as well as the tech side of things. I'm a bit of a nerd, so I get into the tech stuff quite a bit. I love to teach. I actually also teach with the Institute of Real Estate Management. I teach their finance coursework for people trying to get their CPMs. But currently I'm with an amazing company called ResProp. Recently relocated our headquarters here to Austin. We are a third-party management company, trying to help owners, maximize the performance of their properties. And I love this business. I tell people who get into management or are thinking about getting to the management side of the business, you kind of have to be a little crazy and addicted to chaos to really thrive. Chris is smiling because I know he's probably experiencing a little bit of that now with his project in Jacksonville. That whatever you plan to do for the day, also plan for it not to happen, because someone's going to pull you some direction that you didn't expect to go. And I really love that. And this industry's changed my life, given me a career I didn't think I'd expect to have, and trying to find opportunities to share some of that knowledge and pay it forward. I was very fortunate to have some people take an interest in me and my career early on, and mentored me and put me in positions to succeed. And I'm standing on their shoulders, and looking forward to kind of letting some other people stand on my shoulders and grow as well. So.
Awesome. I love that. And I was laughing, but I think it's also funny too, because my high level idea as I got into this was, do it, but the first person I would hire would be like a maintenance person, because right now when I have different vendors come in, whether it's plumbers or AC, that's costing anywhere from $90 to $110 an hour just for labor. But then like for handymans, it's like roughly $50 an hour, $55 an hour, which is much higher than if you hire a maintenance person. A month into it, I decided very quickly that was not going to be the first person I was going to hire. I would much rather hire a internal property manager or leasing person, so that I didn't have to do that day-to-day stuff. Because like you said, it's, I only have 16 units, and it feels like random stuff comes up daily or weekly that I'm always getting torn to go look at. And, I obviously don't want to stay at 16 units. I want to grow much larger and bigger than that. And, the plan was always to never be the property manager day-to-day, doing the day-to-day, overseeing it. But I now very quickly want to move beyond that as quickly as I can, and really start to build that team, those systems, those processes, because you're right. It is, you're dealing with people, and you're dealing with a very important facet of somebody's life. So, you have to be respectful of that and understand that, things are going to happen. And especially if you're dealing with older properties, things are going to come up. So.
Very much so. And like you alluded to, you're dealing with people's homes. It's super intimate to them. When things go wrong, it affects them in a different way. I have a lot of friends who work in commercial management, and they talk about how hard their job is, and I laugh. And tell them, look, when the AC goes out at your building, people go home. Like when someone's AC goes out at my building, they don't go to work. They get upset that their AC doesn't work. Mm-hmm. It's a much different experience, and I commend you for jumping into that side of it. And it's a very different business. And I would say also, the smaller assets are probably the hardest ones to run. Up to about 150 units, when you can start to get multiple people in the office, really 200, when you can really cleanly with payroll get 2 people in the office. But those, under 100, where you have to have a distributed, management operation, usually because one property can't afford to pay for a full-time staff. And then that person has to be really extraordinary. They have to wear every hat. And when you have a larger asset, there's people to delegate to. There's, you have a team, and you can spread some of that stress out amongst other people. When it's just you, it's really hard, and it takes kind of really special people to figure that out. And I think that's underestimated a lot. They say, oh, you just manage a 100-unit deal. It's like, yeah, and they lease it and they handle all the maintenance requests and make sure that those are handled in a timely fashion with whomever they're assigning to do that. They're doing the marketing. They're they're wearing every single hat, and it's really tough.
No, it's definitely been an interesting experience. But we were talking quickly right before we got on, and you worked for a company that I don't know if you quite worked from when it went from 600 to, I think you said 50,000 units, but I'm sure you were there for a period during that large amount of growth and probably not so long of a time. I think a lot of people are interested in obviously growing their portfolio, growing their team, doing different things. What was that experience like for you? And what do you think were some of the biggest factors in their ability and your ability to grow so large, so quick?
Yeah, that's a really good question. So I was there from 600 to 14,000, 15,000 units. And that was from
a big change.
Huge change. It was several huge changes, throughout that time period. So I started late 2008 there and left at the end of 2016. Early on we were very mom and pop, just trying to figure it out. It was a small team, and got up to about 1,500 units over the first year and a half I was there. One of the challenges with growing, because we were a blended company, the owner of the company invested in assets. He owned, when I started, about 60% of what we managed. By the time we left, that was down to probably close to 35%. But he was a really active investor, brilliant guy. Still a friend of mine, someone I have a lot of respect for. But he recognized really early on that for him, he was going to always have to sell deals. And to have good people and to have stability within the management platform, we were going to have to do work for other people. We were just to keep the pipeline robust enough and keep our portfolio robust enough to be able to hire quality staff. So we were third party and first party right from the start. I think that played a big part of the growth. We weren't just buying our way to some of the benchmarks. I remember 1,000 units was a big deal for us. 2,000 was a big deal for us. I think then 4 and then 10 were the next kind of big ones that, between 4 and 5 and 10, each of those allowed us the revenue stream to then be able to add kind of pieces that made our management operation better. Now, one of the other things that made us successful is Jason, who is the founder and continues to be the owner today, was really, really smart about investing ahead in what we did as a company. And I'd say where I am now, ResProp is doing that same thing really well. And when I say investing ahead, it's, we had Yardi, like full Yardi at like 800 units because we knew we weren't going to be an 800 unit management company forever. And it made sense to get that implemented and figure that out when we were small. I shifted from a multi-site operations role to running training around the time we had 2,000 units. And I had a staff working for me by the time we had 3,000 units. And there's not a lot of companies at that size who are putting significant resources and dollars into training and developing their people. And that was a keystone of the growth of that company because it's a people business. At this point with where I am in my career, I'm not directly managing properties anymore. So I'm not making decisions every day. The quality of my management is reflected in the quality of my managers. And, they're the ones at the site dealing with problems, reacting, solving those problems. And if those people aren't trained and aren't capable, then nothing else matters. It doesn't matter if you buy the deal right. If you're not executing, then you're not going to be successful. So getting training, getting our tech situation set up really early. And then we were always anticipating growth and hiring staff ahead, which limited revenue in the short term, but it not guaranteed necessarily, but it set us up to make sure that the properties performed. And that's really what mattered. On the investment side and on the ownership side, generating good returns for our partners. We were doing a lot of value add early on. So running those construction projects in a really clean, efficient manner. It's not just about the product that you pick. It's, how are you managing vacancy loss? How are you managing turns? How are you doing punch? And that's something a lot of people miss, like at the end of a renovation. What is your system for making sure that what you're accepting from your GC or whoever's doing the work is the standard that you want and is consistent. So he hired in some people with great industry experience to help run operations, who brought a lot of knowledge. We were able to promote from within, which really helped. The training helped a lot. And then just a lot of hard work. Like, it's not easy. Management, if you look at what we do in a vacuum and each individual little thing, they're not that complicated. But, the fact that you have to do 7 of them at once and then you get distracted and have to go over here and do something completely different is what makes it challenging. I hope that kind of gave some things. It wasn't just one silver bullet. It was really kind of a confluence of a bunch of different stuff that we had to do to be successful.
Mm-hmm. No, I think that's definitely important. I think it's, similar or, exactly the same for most successful businesses or people that grow at any sort of scale, right? Investing in people, systems, processes, et cetera. Something a little bit more tangible that maybe might be helpful for people that are just doing it themselves or getting started, right? Because I think that's a very, going to 14,000 units is kind of niche. But what do you think are some of the most important things to either do, look at, consider, look for in people as you are managing properties or looking at property management companies?
So I'll start with property management companies. You want to find a company that's rooted in best practice. And that's the easiest way to do that would be to look at, is the company credentialed with like IREM with their AMO, or, who's running that company in terms of their fundamentals. Especially today, there's a lot of management companies that over the past, pre-2020, the past decade, almost succeeded in spite of themselves. Market fundamentals were really good. Leases were walking in the door every day. But when you went and toured the property, I've done a lot of due diligences in my career, and you get under the hood and, the paperwork's not clean. The grounds aren't kept up. The residents are there, but they're not really happy. Maintenance isn't handled well. The reviews are bad. You could survive those issues earlier on. So if someone's looking at a management company, I'd encourage you to look at what else they manage and go tour those properties, right? Like, the people who are going to be operating your property are going to be from that same group of people. So I'd go to some of their assets and what is my leasing experience like? What do the grounds look like? Is it clean? Is it organized? What's the attention to detail in terms of how they operate? I think there's a lot you can learn from that. What's the quality of the tour? Do they sell? Does it feel like there's intention and training behind what they're doing? I think you can learn a lot there. Asking, and again, when you're not super experienced in the industry, or you're just coming up or haven't worked with a lot of management companies, knowing what to ask is kind of tough. So understanding, asking about how do you handle rent collection? How do you handle things like evictions? How do you handle, what's your typical screening criteria? And make sure that all of those things align with what you're looking for. On the individual side, I'm a big proponent of industry education, especially, I've mentioned the organization a couple of times now already, but the Institute of Real Estate Management. For me, when I got my CPM, it changed my career. specifically the finance courses that I teach now. That's the big reason why I teach those, because I walked out of that class a different person. I learned about cap rates. I learned about how investors make money and why that they invest in multifamily. And that changed my lens and really understanding of like what a $4 rent increase, at a 250 unit property could mean in terms of value. And it's a lot more than $4. That's a big piece of it. Experience with different asset types. If you're looking to do renovations, if they haven't run renovations before, it's a really steep learning curve. Or if you're asking them to be a one-person show, like we were talking about earlier, but they're used to running big teams, making sure you vet out that they recognize what some of those challenges are going to be. And then I also think, there's a big cohort of people who have gotten into the industry and who are investing in deals. And I love that. I love seeing the industry grow. I have a great passion for the business. But someone used an analogy with me fairly recently that I loved. I was talking to a friend of mine. He's out of Houston, invest in multifamily, and he wanted to start his own management company. My first question was why. You love to buy deals, and trust me, management is going to take time away from that. There's a lot that you're going to have to do to make that really successful. Even just getting the scale to afford back office like HR and training and marketing, et cetera, is hard and expensive. His response was, well, no one's going to care about it more than me. That's fair. But the Buss family that owns the Lakers loves the Lakers, but they still have LeBron play. They're not, trotting Jeannie Buss out on the court to try and make 3-pointers. So there's a trade-off there. And if you can find really good management, I think they'll outperform and free up a lot of owner-operators who are trying to figure out how to do it themselves to go buy more deals, which is ultimately where they're going to make money. Property management is a very low margin business. You don't make a ton of money in management. So there's if you can find a good manager, that's the kind of the key piece. But I think sometimes people are so committed to doing it themselves, and I think they really underestimate the complexity of it, that it ends up taking away from the revenue that they could have made or additional deals that they could have bought. So you have to really be real with yourself. Do I really love this? Do I want to do this? Or is it better to have someone else do this and me spend, time's the greatest resource we have. Spend the finite amount of time you have underwriting more deals, talking to more investors, raising more, equity, and deploying that capital and with something that you do love.
Mm-hmm. I think it's a really good point. And I think you said something that, especially that last point about spending more time and energy on deals, it's definitely something that I've personally realized that it's definitely taken away from time. But I think I was pretty eyes wide open coming into it, that I knew that was going to happen. And the reason I still chose to do it, because I've heard very similar things from other people that you've just said, was I always felt there was a gap in my knowledge of how the operations actually work, as well as a lot of the physical aspects of properties. How exactly does the plumbing work? How exactly does the AC work? I know things here and there, and I pick up things, and I like to think that I ask more questions than probably the average person, but who really knows? But for me, it was always hey, let's do it for a little while. Yeah, it's probably not the best ROI in your time today, but if I can have a better foundational knowledge for the future, whether I build property management in-house, which is the goal, or in 2 years I decide it's not worth my time and I'm better off hiring somebody third party, which may happen, at least I have a better personal understanding of what actually goes on, so that I can kind of have a little bit of a better bullshit detector, so that if someone tries to pull the wool over my eyes, I have some sort of an understanding. So that was always the reason for me. And I think you're right. There's something to be said for, caring more than somebody else, or you're going to be the one that cares the most. But you're going to spend your time on lower dollar per hour work, and it's not necessarily going to result in the largest return on your time. Yeah, maybe you could do it better. Maybe they're only going to do a 60, 70, 80, 90% job that you could have done because you just care more. But the time it's going to take you to care more is time that could be spent buying another deal, which is going to make you way more money. So I think it's all just a balancing act and understanding, like, what's your future vision? If your future vision is to get to 20,000 units or 10,000 units, whatever it is, then you're not going to be able to probably spend the time day to day. You're either going to need a partner or build up a team and do it very quickly. But if your goal is to just have 50 units that you own just completely by yourself, and that's your retirement plan, well, then that makes more sense, right? You're going to care the most. You're going to probably do one of the better jobs out there, and you're going to do exactly how you want to do it. So I think you really got to back into the understanding of what you want to accomplish.
I completely agree. What you want to accomplish, and then different ways to get help. I've worked with several clients in the past who kind of grew with me as a manager and then spun off and went and did their own management company thing. And I knew that going in, that was part of their goal and their plan. And, I gave them the same little thing, like, why do you want to do this? And they told me why, and I got it. And I told them from the front, like, go to school on me. Like, I don't operate out of a black box. There's no curtain that you're not allowed to look behind. I'm going to show you everything that I do and why I do it. And I think that goes back to having a really good property manager, and having a manager who's the right fit for you. You're not going to have a company that's in the NMHC top 15, who's working with big institutional funds and like life companies and $100 million, $200 million assets. They don't have the infrastructure set up to be able to spend that sort of time with you. But there's a lot of still really, really good managers out there, and a lot of really good people out there in the business who don't mind spending that extra time. I don't know if I'm unique in that I'm completely obsessed about this business, and I could talk about it all day. Like, this is what's fun for me. This is my entertainment. So I have a lot of owners who are just getting into the industry now who come from tech or come from even just like commercial real estate, haven't done the residential side, where, I get down into the weeds with them and talk about, this is why we cost things this way. This is why we do this way. This is, and walk them through it because one, it makes me better. And because I get to question, like, why do we do it that way? And kind of have those dialogues. Like, when you teach something, you get better at it. And I enjoy sharing knowledge, and I don't think that's unique to me. There's a bunch of people out there in this business who do that. So it's just a matter of finding the right person. If you are committed to having your own management company, even if it's not an employee, whether it's a consulting or someone who's a friendship or relationship that you build, there's a lot of ways to get those answers. And I think the continued pursuit of that is really important, because there are a lot of management companies out there, just candidly, that aren't very good. So being able to recognize that and have something to compare against, I think is really valuable.
So self-serving for yourself, not for me. What questions can you ask a management company to try and dig in if they're garbage or if they're great, right? Because I'm sure you guys get questions all the time, and I'm sure you guys have been fired, and I'm sure you guys have been hired, and I'm sure you've been hired. Everything's gone well, and then maybe got fired, and maybe a property sold, and the new owner didn't come in and retain management. What are things that investors can ask managers to weed out the problems early on? I get touring deals, right? I tell people all the time, go look at their other properties. It'll tell you more about them. Now, keep in mind that if an investor just drains the bank account to zero, it might not be the manager's fault. But if they have 10 properties and they all look like shit, it's not the investor, it's the management company. But besides touring, which is a visual, what questions and how can you cipher through, some potential management bullshit?
So I tend to look for and ask questions around the basics. So, how do you handle rent collection? What's your what was your delinquency as a company, at month end this past month? Tell me about how you train and develop your staff. How do you make sure that the people who are at my property are successful? If it's a slightly larger company, what is the span of your regional managers? Like, how many properties do they have? I like to keep that number between, like, depending on what's going on the property, between like 3 and 6. If it's a heavy renovation or a lease up or something like that, I count that as 2 properties so that you end up on the lower end. So that's the portfolios that have 3 or 4. And if everything's a stable asset and you don't have big projects that are going to take up an inordinate amount of your time, maybe it's 6 or 7, worst case. The support, how do you support your teams? Accounting is a big thing. So looking at report packages, cleanliness of what those look like. What's the cadence of when I can expect reporting each month? So, if they're getting reports out on the 10th, that tends to be indicative of things being clean, able to get things done in a fairly tight fashion. If it's the 15th or later, there's a lot of cleanup that's happening, but also what are you doing? Like, you need to be focusing on this month, not looking backwards. So it's really kind of those basics, like how are they delivering information? How are they developing their people? What's the communication cadence that I can expect? Because I think those are things that someone would answer just kind of reflexively, and not necessarily always recognize that there's something underneath there that might be shown, that where you can just kind of see between the lines, because there's a lot of fast talkers in this business, that in any business, right, who can project something that's not necessarily reality. And I think it's success in property management is about doing the basics really, really well, right? Property management hasn't changed substantially. Like, we take care of people's homes, we collect their rent, we do maintenance, we make sure that we pay the bills, and then we send the reports and the cash back to the owners. And it's been that way for a very long time. And I think asking questions around that, because that's where a lot of people miss. They'll want to talk to you about the marketing things that they're doing, or a lot of the shiny flash and sizzle, and not talk about the meat and potatoes of what it is that we actually do.
No, I think those are great points, right? I think those are things that talk about the details and not the fluff that people sometimes get attracted to. And at the end of the day, you're right. Property management is not a new thing, right? It's collecting rent, making sure people are happy, and having really good staffing. And I think the biggest thing you said there, which is just so important, is, when are financials coming out? Because I question, when my financials don't come out on time, I always question, what is getting done behind the scenes that they can't just get that out, right? It to me, they might have to clean some stuff up, but why am I getting on the 23rd one month and the 7th one month, right? That makes no sense to me. And I put a closer eye on things when it's later in the month. It's like, okay, what took so long here? But I don't think that's a question people ask enough. I think it is what it is, and they just take the management word for it, as opposed to pushing back saying, I need my financials by the 10th, right? It's sort of going in with the expectation of you trying to, both people have to work together, but at the same time, are you the right company for me? You're going to work under the guidelines as long as it meets as long as we can work together to accomplish what we're looking for, because it's a partnership at the end of the day, and everyone's got to be on the same page. If someone's trying to, it's got to be done this way or it's got to be done that way, those are probably either investors you guys don't want to work with, and or probably investors that at some point in time something might break.
Yeah, I think you hit right on it. It's a partnership, and making sure that interests are aligned in terms of, being able to drive success for the property, what that's going to mean, and making sure that as an owner, you're served in a way that sets you up for success, not just in this deal, but down the road. Like, I'm very aware that, especially some of the groups that I'm working with today that are buying their third deal or their first deal or their fifth deal. That's critical to their long-term plans, because if you fumble early, you lose all that kind of relationship equity with the investors who have invested in it. And making the wrong decision on management, if that's what torpedoes your goal, that's going to be hard to take for a lot of people. I think that's why, back to what we were talking about earlier, a lot of people keep stuff in-house, is because at least if it fails, it's on them, and not a decision that they made. I think one other thing that I think everyone should do, that I'm surprised I don't get asked this question a lot more when I'm working with new owners, which is, I want to talk to 3 other owners that you work with. References are valuable, and to the extent that you can say, who owns that property, would they talk to me about a specific asset that's maybe very similar to yours? That's not always possible. Sometimes just because the owner of that property doesn't want to talk to anyone. But getting that reference and that being able to ask those questions owner to owner, or how's your experience been? What have you liked? What haven't you liked? Is there anything I need to look out for, or I need to stay on top of them with? Are all really good questions to ask another client of that management company before you make a decision.
Do you guys prefer working with like sponsor groups that have investors, or a guy that has money, buys a property, and he's a one-off owner? Where do you guys like to work, and why?
So between those two, I don't have a big preference, because I kind of see them a little bit through the same cohort. I'm not interacting with their investors on a regular basis. That's kind of them or their asset manager, or depending on how their structure is set up. For me, the line's more between the family office and people who are getting into it in the smaller teams, versus institutional groups. And between those two, while I enjoyed the assets and working with some of the institutional groups that come with that, I like working with the smaller groups a lot better. As a company, I think we probably echo that, and recognizing with where we are in our growth, that's what the profile of most of our existing owners and clients. But you're able to do more for those people. I think you provide a lot more value. There's not an Ivy League MBA, going through an Excel spreadsheet, emailing you every day with a different question about a day over day trend. And you just, again, I think I feel like I provide more value. For me, this is a relationship business. I like meeting people. Chris and I met because he posts a lot on LinkedIn and asks good questions and stuff. And I pop into his feed and share some answers and share some of my feedback. And, we kind of hit it off and hopped on the phone. For me, that's what this is about. And you don't get that as much with the institutional groups. So whether it's a high net worth individual who's looking to deploy capital, or someone who's sponsoring a deal and raising equity, through more of a syndication, to me, it doesn't really matter. If you're looking to, the big thing for me is, are you looking to do right by the people who live in your community? That's the one deal breaker, period. Is I have zero interest in being a slumlord. We deal with people's homes. That's very intimate. It means a lot. It's a responsibility that we have to make sure that those homes are managed well and kept up and maintained. So if someone's not going to pay their bills, or is not paying vendors, then I can't work with you. And I know stuff comes up and we can try to navigate out of things in the short term. But if it becomes perpetual and just an issue, and or you're working on construction draws and we have bills to pay, but you keep the construction draw instead of paying the bills, I'm probably not going to be operating your property for much longer.
Oh, I was going to say that makes a ton of sense. Obviously, there's that, and those are probably all questions that you look for in an ownership, before you take on a property. If a manager it goes like, what's the right amount of communication or the reporting expectations, or when here's a better question, when do owners get too involved, or can they get too involved with just trying to, I don't want to say micromanage, because listen, the greasy wheel gets the oil, but when can someone be too much that hinders management performance, and vice versa? What can management do to keep owners, without going, loony?
So I think I think those two things kind of go together. So with what management can do, usually helps resolve the owner who feels like they have to plug in every day. And that answer is really easy, and that's communicate. I think most people who buy and invest in real estate recognize that stuff's going to go wrong, especially if you're buying older assets. Things are going to break, pipes are going to burst. You might have a fire, hopefully not. But stuff happens, right? That's the business that we're in. And one of the things I train my regional managers and talk to my managers about is stuff's going to go wrong. Our owners know that. It's how we respond when those things go wrong that determine whether or not we were successful in dealing with that. So being proactive with communication, really looking at how the property is performing, how we expect it to continue performing. If there's going to be an issue, whether it's a cash issue, whether it's an occupancy issue, whether it's a general overall market issue, when you see that, communicate that immediately to your owner. Or if you have we try to set up a recurring cadence with our owners to where, we have calls once a week. They get automated reporting that goes out the day before that call. So all parties involved know that there's a forum to address, questions, concerns, talk about wins, talk about things that are working. And usually that communication provides comfort to the owner that they feel good about where things are. I think I have an expectation when a relationship is new that we're going to spend a lot more time with that person, right? They don't know us yet. And they're trusting us with the operation of a $7 million, $15 million, $50 million, $90 million asset that for them is maybe one of the biggest investments they've ever made in their life. Or they've got like their grandmother's money or their aunt's money in it. Like it's really important to them. That's something I tell my teams a lot is, if you just bought something for $15 million, you wouldn't be thinking about it every day. Like, of course you would. So, as managers, I think we have to have a recognition of where we are with that owner. Have we been failing? Then yeah, I would expect them to be a lot more involved or asking more questions, right? If the market's not performing, are we communicating that and showing where we are relative to the market? Now, to the side of where someone can get too involved, I don't think that's a hard line. I think it really comes back to more of like tone than actual level of engagement. My goal is to get with everyone where they feel comfortable and confident with us that we're on that once a week cadence. And if there's an emergency or something that pops out, they can call us, we can call them, and we recognize, that, all right, we're off schedule, so something must have come up. Let's take a look at it. But there's the asset managers that, vacancy moves a half a point, like week over week. And, they call kind of losing their mind and don't give you an opportunity to say, yeah, we're aware, and we've also pre-leased this, or this is what's going on. Like provide some context around what's going on. I think is really, again, important for us as managers to do. This could keep things civil, I guess, for lack of a better term. And I've had those owners who are in every little tiny bit, and sometimes they have ideas that I've tried and I don't think will work, and I try them again because ultimately they're the owner, and it works, right? So I think you just have to remain open, and communication both directions is really the key. Because every asset's different, right? Like some deals you have to talk a lot more often than on others. And I think setting the boundaries and the expectations early goes a long way in that relationship to keeping everyone kind of aware and aligned on what it is that they're trying to do.
100%.
No, all good point.
Yeah. You did mention something before we hopped on right before about feeling like the property management industry is like outdated or doing a lot of old tactics, different things there. What are some things that you're seeing in the marketplace that you think isn't being adopted, needs to be changed, or that people should be thinking about incorporating into their assets, their property management companies they've hired or own? What are you seeing?
So there's several things, but the biggest one and easiest one to point to is our job roles and responsibilities reflect the needs of a property in the 80s and early 90s, and not property management today. So like the greatest example of that is at a typical, especially larger asset, the property manager, who's your most experienced, talented, highest paid person at the property, probably spends 60% of their time doing data entry and paperwork. Whether that's entering payables, whether that's generating reports, whether that's closing out work orders, depending on the structure of the management company. And then your least experienced, lowest paid person is responsible for your sales pipeline and the ongoing generation of revenue of your property. And a lot of them, sometimes those people have like a week, 2 weeks experience. And at many companies, when that person calls in sick, they hire a temp who knows nothing about your product, who knows nothing about the neighborhood, and is not put in a position to sell your asset. And we sell time in a box. A day gone is a day gone forever. I can't sell today, tomorrow. Today's already gone. I'm a big proponent of flipping that in a lot of ways. I think, it was built that way because of, paper record keeping. Even when I started, we were still taking bank bags to the bank and, doing manual check deposits and, but with check scanners and online payments and modern property management software, where if there's a data entry error, it can be cleaned up and fixed very easily. That's no longer, it's important, but it's no longer critical that that's what the manager spends most of their time on. I want my manager managing the property. I want my manager developing their team. I want my manager doing things that drive revenue. I want them to have an understanding of the market so they can proactively communicate to owners when there's opportunities or when there's issues. And they just don't have the time at most companies and in most structures to do that. So there's ways to figure out how to give that back to them. I've used centralized some admin tasks, which is what we've done at ResProp. Reconfigure some of the job responsibilities, which is something I did at a previous company. I didn't have leasing agents. I had community admins who were essentially like an office manager. And they took the phone calls. So they knew how to enter service requests, but they didn't tour. Like you had to, if you look at any other industry where sales is the primary driver of what they do, there's a deep training process, and then you have to kind of be approved. Like I sold cars when I was a lot younger. I had to go to boot camp on every car that Ford made before I was allowed on the lot and pass a test. And I go tour deals all the time, and sometimes it ruins my day because I'll get a leasing agent who can't tell me about the neighborhood, knows nothing about the property, and ultimately that's not their fault. It's a byproduct of structure, and it's a byproduct of what the management company is putting their energy and emphasis on. So that's the big one. And then, the industry just runs not decades, but like 5 to 7 years behind on any sort of trend. I remember fighting for Facebook pages for properties in 2012 and being told, like, why does the property need a Facebook page? It's like, well, I don't know. It sells everything in the world. Like, why couldn't it sell apartments? We're working with marketing companies now who work with or kind of specialize in multifamily marketing, and all they talk to me about is AdWords. And like, it's not 2005. Like apartments.com has bid up the cost of all of these search terms, and and I'm competing against against them in my pay-per-click, why would I, when there's other routes to go that are maybe more cost efficient, whether it's in-stream YouTube ads or a bunch of other things that can be leveraged if you have the content to deploy there. Marketing on socials, like the thing, the past year and a half, 2 years in multifamily, it should have been the thing 4 years ago, 5 years ago when it wasn't being done as much. So we're just really slow to adopt any sort of meaningful change. And I think I understand why. There's a couple big monoliths in the industry, and for them doing something new or retraining staff or especially reconfiguring job roles and job titles, is essentially almost impossible. Like you have to do that for tens of thousands of employees. Like there's no way. Like I couldn't imagine it doing for like 500 employees, much less 20,000. And so they just kind of get stuck. And our industry is ripe for disruption. There's a whole bunch of blockbusters out there and BlackBerries. And I know there's a bunch of people out there trying to figure out how to build Netflix or build an iPhone. And, someone's going to pop out and figure out how to do that. I hope that's us. That's one of our long-term goals. Granted, we have to operate properties stable and effectively today because that's what matters to owners, is being able to operate it now. It doesn't matter what we have planned. But the industry could use a little bit of, it could be turned on its head a little bit. And I think that would benefit everyone involved. Drive down cost of operation and improve performance and give people a good career path. I tell managers all the time, you need to recognize what you do. Like if you're the manager at a high rise in downtown Austin, or even like a manager at a garden style property in Austin, it's got 250 units. You need to realize that you're the CEO of a multi-million-dollar a year business, and you need to approach it like you're running a business. You're not just a property manager, and the decisions you make have a big impact on people's lives, both with the people who live there, but also the people who invested in that deal. And when that light bulb goes off for people and they recognize that it's not just heads on beds, that they're running a business, they approach it differently. And I think that's a recognition that more people in the industry need to have is, that person doesn't even realize that they're responsible for a $15 million asset or a $30 million asset. That's a big deal. It was to me. And I think it is to a lot of people. So as an industry, we need to kind of raise the bar and raise the expectation and also educate people into what is it they really do, and not think that they just need to sit in this little bubble and do. We focus a lot on the how, but not enough on the why, because the how is always going to change, especially as technology continues to evolve. But if you know why you do something, you can always adapt to a new how. But if you only know how, then the industry might leave you behind.
Yeah.
No,
you touched on something go ahead.
That is so important because real estate in general is antiquated. We're behind the times compared to so many other businesses. So the forefront of that, and I remember 4 or 5 years ago when managers were still trying to post on Craigslist. I'm like, guys, Facebook, social media, and it was just what was done for so long that nobody wanted to buck that trend even longer than that. So I think it's a good forefront on, the business needs to be turned upside down and shaken out, because I think there's a lot of old dogs that don't want to learn new tricks, and new tricks are coming. So people on the forefront of that is obviously important.
Well, it's a challenge because as an industry, we recycle people. So you talk to people who work in management, most of them fell into it. I fell into it. They all have their story of they lived at a property and the manager was like, you have a great personality. Why don't you lease apartments part-time? And then 15 years later or 10 years later, they're a regional manager or a senior vice president. And most of the people in the industry have come up in the industries. The only thing that they ever know is their box. And when they leave one company, they leave one big national company in a role and they go to another big national company in that same role. And there's not a lot of new ideas that come in. And I think that's part of what has stagnated it, kind of throughout the past 20 years is it's been a very insular industry, and we need to work really hard to break ourselves out of that.
Mm-hmm. Yeah, it's funny you said the thing about the head property manager being the CEO of a multi-million dollar company. It's so true. Somebody was talking about it. They're getting paid $20 an hour, $25 an hour.
Yeah.
Probably the quote unquote lowest paid CEO of a multi-million dollar company in the country. Obviously, it's a little bit different, right? They're not totally doing it on their own. They have oversight in companies and things of that nature, but it's true. They're running a staff of X. They have X amount of clients. They have, hundreds of thousands, if not millions of dollars in revenue they got to keep track of, and expenses they got to keep track of. And it's not necessarily the easiest thing in the world to optimize. And it definitely feels like you said, they just came up through the ranks. If they are managing a $50 million property, they probably started as, a leasing agent, worked up to, a manager or an assistant manager or a smaller property, and then slowly worked their way up. And, now they're being thrust into this role that's very different and requires a different skill set than I think most people recognize.
Why things like industry education are so important. It's why really I'm a big promoter of like IRM and people who can get their CPMs, because it's not about the acronym and the sheet of paper that hangs on your wall. It's that you get better at your job after every single one of those classes and after that experience. Because I'm able to do what I am doing now because I can have financial conversations with owners, because I understand what they're trying to accomplish. I understand the metrics. I know what an internal rate of return is. I'm able to talk to them about, different renovation plans and what the investment return associated with that might be, how to spend different CapEx. And I'm continually surprised, and you would think after 15 years in the business, I wouldn't be as surprised as much that there's a lot of people in really key roles who interface with owners who don't know that. And that's the responsibility of management companies to continue to develop our people and to continue to bring in talented people into the industry and show them a career path but making sure a part of that career path is, getting education from outside of the company silo that they're in, and even the industry silo. Like, our leasing agents, when I train and work with leasing agents, I'm teaching you to sell. Don't think I'm teaching you to sell apartments. Like, sales is sales. Like, you could leave this industry in, 2 to 3 years and go sell anything, and the fundamentals are the same. Marketing is marketing, managing teams is managing teams. So, bringing in education and developing your teams in a more holistic business sense tends to pay dividends versus just, heads on beds, occupancy, apartment management, not really as opposed to business management, and then how that fits into running an apartment. Again, more of the why. Like, why do we do the things we do within that context?
100%. And I think that's a ton of great info. Definitely picked up a couple of things myself, but I think that's a really great place to end it there and wrap it up. Steven, thank you so much for coming on. If people want to learn more about you, follow you, get in touch with you, where can they do all that stuff?
So LinkedIn is probably the best place to find me. I try to stay away. Weirdly enough, I just talked about how much I like using social media for marketing. I don't use it for myself very much. But LinkedIn, Steven Rea, REA, based in Austin. Feel free to reach out. If you send me a connection request, don't be surprised if I send you a request for a phone call. I like to actually know the people in my network. And then ResProp Management, ResProp management.com, based in Austin. And then SREA at respropmanagement.com. And to your audience, and I know you have a lot of people who are kind of similar to the two of y'all, whether they're owner managers or private small groups on the come up and adding their portfolios. If it didn't come through in this, I love this business. I love talking about it. I'm happy to be a resource to people, and I always put that out there. There's a fairly small handful of people who regularly take me up on it, and I enjoy it, and I'm happy to answer questions. And Chris, I'm excited to keep tabs on your Jacksonville deal. Like, that's gonna be a fun one for you. So, and John, sorry, I have a friend, Jason Cohen, so brain went there for a second. But John, I appreciate the time, and I really enjoyed the conversation with you both, and I definitely look forward to staying in touch.
Awesome,
Yeah, for sure.
Man. We appreciate you having you.
Yeah, no, guys, definitely go hit him up, especially on LinkedIn. We had a great conversation, definitely helped me out. It was one of the, better conversations I had talking to managers and picking his brain. So definitely don't hesitate to go and do that. But thank you guys so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to somebody that would get a tremendous amount of value from this episode. Steven, once again, thank you so much. This is amazing.